Hi everyone, let's go over my cycle, macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the cycle bullish scenario where we are looking for multiple 1-2s towards the upside, where the low of green 2 is already finished at 15k, and we are now looking for a blue wave 1 towards the upside, towards this target area over here. But before I talk about the target area, considering price and time, let me first explain how I got to it. So what you can see over here is that the second wave 1 in yellow is a little bit shorter than the first wave 1 in red, as if you take a trend-based fib extension from the low to the high to the low, the yellow wave 1 hits the 0.618 on the logarithmic chart, and the green wave 1 hits the 0.618 taken from the low to the high to the low over here, which means that the green wave 1 is again a little bit shorter than the blue wave 1 over here, which is important. Another thing considering time is that this wave 1 over here is a little bit shorter in time than the red wave 1, as it hit the 0.786. But the green wave 1 over here is the same length in time as the yellow wave 1. So the yellow is shorter, the green is the same length in time. So therefore we can get to a certain target area in time and price with the 1-to-1, meaning if the blue wave 1 is going to be the same amount of time as yellow and green, it's going to end somewhere in Q4 2025, where the 1-to-1 is in October 25. But because the yellow wave 1 is shorter than the red wave 1, I also included the 786 and the 618, which gives you a range between September 24 and October 25. The price range is then according to the 618 and the 786. Over here, the 618 hit, the 618 hit. So the 618 over here is sitting at about 100k, the 786 sitting at about 180k, and the 0.5, just in case, gives you a target of about 75k. You also see two bars patterns on the chart over here, and these are basically copies of the chart of the previous beginnings of the bull market. So we over here have the one that was starting in 2015, and then we have the one over here that started in 2019. And I have these bar patterns on my charts just to compare the beginning of the current potential bull market with previous bull markets, just to make sure to see if we are kind of like in a same pattern, a same structure towards the upside. If we then put this bars pattern over here on the current price section, then you can see that we are, well, exactly at the same price with the pink bars over here. So pretty much we're doing the same as what we did over here for the potential start of a bull market when we consider price and time over here. And if we compare it with the one from 2019, then you can see we're also having overlap at the moment with the bars pattern. So also with this one, we are pretty much at a good angle considering time and price. If we then zoom in to this structure over here, or actually the whole green structure, then we get to this over here, the macro count. 1, 2, 3, 4, 5 waves are finished in a wave 1, then a wave 2 is finished as well, and then a WXYXZ. Now it has to be said that a WXYXZ is very, very rare, but a WXY does not really work very nicely. So this is something we do have to keep in mind. Wave 2 over here ended just above the 0.5, just before the 0.382 fib time. However, this wave 2 is the exact same time, this one in green, as the yellow wave 2. So preferably this is your low, and we're going to be looking for price to move towards the upside on the macro, where this is now the beginning of a bigger wave 3 towards the upside. If we then zoom into the high time frame scenario that is bullish over here, then we are looking for wave 2 or B to already be in. Of course, in the bullish scenario, you want this to be a wave 2 and a 3 to the upside, but just in case, I also have an ABC, but more about the bearish scenario in a second. Where in the bullish scenario, you have a wave 1, then we have a running flat in a wave 2, which is a rare pattern. It does exist, of course, hitting the 0.382, which is less common for a wave 2, more common for a wave B. And then you want to see a wave 3 towards the upside, where usually a minimum target is then the 1.618 pulled from the low to the high of 1 to the low of 2, which is sitting at about 50k. Now, the reason I also have an ABC and the vertical line over here, a fib time on my chart, is because if price is taking a while to move towards the upside and goes towards the 1-to-1 around 40k, the probabilities increase of a wave C as well, because for wave 3 you really want to see an explosive price structure towards the upside, very quick indeed. However, in an ABC, with the 0.382 being more common for a wave B, we have to at least take a wave C into account for potential downside, where usually a wave A and a wave C are quite similar in time, and that is why the 1-to-1 is on the chart, taken from the low to the high to the low over here, comparing the time of A with the potential time of C, which gives you a target around February next year, 2024, with the target of a wave C being between the 1 and the 1.236, taken from the low to the high to the low over here, sitting between 40.4k and 44k, which, as you'll see in a second, is a very, very important target indeed when we go to the macro bearish scenario. But before we jump into macro, we go to the cycle bearish scenario over here, where in the cycle bearish scenario we have a very, very high time frame 1 2 3 4 5 impulsive structure finished, where wave 2 retraced to the 0.236, wave 4 to the 382, that's a common target for wave 4, and wave 5 ended nicely at the 1.618. In this particular scenario, we are then looking for a multi-year bear market. Of course, it already takes a while, but you're going to be looking for another dip towards the downside for a wave 2. Now, in this particular scenario, I mean, most commonly on the lower time frames, the most common target of a wave 2 is between the 05 and the 786. Doesn't make sense on these high time frames, because then the price target will be 400 to 20 bucks. I mean, very unrealistic, of course. However, on these higher time frames, just like we can see over here, the 236 can be an area of interest, or maybe even just above the 236, based on the support we have between 8 and 11k, which I'll show in a second. But we're at least looking for another move down. For wave 2, the 0.236 is sitting at 6k. Do not want to see this low being broken, to be honest. Even in this bearish scenario, in a 1-2 continuation, probabilities are very low you're gonna break this low, because in general, also with stocks and everything, you have this type of like a structure towards the upside, right? Higher high, higher lows eventually. And the fib times on the chart, most commonly, a wave 2 ends after the 0.382, but on these high time frames, the 0.236 or any space in between is important as well for a potential low of 2. The 0.236 is sitting on the 1st of April, or basically April 2024, and then the 0.382 September 2025. If we then zoom in to the bearish macro Elliott Wave scenario over here, which then basically means this structure for another low to the downside, then we have to look at this scenario over here. We have a finished 5 waves to the upside over here to finish a higher time frame wave 1, and we are now looking for a multi-year bear market ride in a wave 2. In this particular scenario, we are then looking for an ABC to the downside over here, where currently we are inside the yellow wave B, which by itself is then also an ABC towards the upside. Now, we just passed this big white box, a support resistance area, support, support, maybe a bit of support, resistance, resistance, resistance. We now closed above, which is positive for price, then moving towards the very, very important resistance area for this bearish scenario, which is between the golden pocket and the 786. Reason being that the golden pocket is in confluence with this point of control multi-year volume profile here, point of control and the golden pocket, and the 786 in confluence with the value area high at about 48 to 50k, and the golden pocket is around 38 to 40k. So this is very, very important indeed, or actually like 39 to maybe like 42k. So very, very important area of resistance over here between like 38, 39 and 50k. But also the target of a wave C, if the low of B is already in, is currently on the logarithmic scale with the 1-to-1 right on top of the 786 at 50k. And if I turn the logarithmic scale off, then you can see the most common target for a wave C, being the 1-to-1 and the 1.236, is now sitting at 40k. So it's indeed a very, very important area of resistance for potentially the high of a wave C, and then a move back towards the downside, where losing this support resistance area would be very bearish indeed for lower lows to be expected. Potentially though, you can still have a move down, and this being a wave B, but it depends on how price moves down, and that is something we cover in the daily update. If we look towards the downside, if wave B is going to be finished and we're looking for C, then the most common target for C is between the 1 and the 1.236, taken from the high to the low of A to the high of a potential wave B, which is in very nice confluence with the golden pocket over here, taken from the low to the high, as well as the value area high of also this multi-year volume profile. So the support basically ranging here between 11k and 8k. Incredible support, incredible resistance for price. If we then go to the more bearish scenario over here on the daily time frame, then we are looking for another move towards the downside in then a wave A or 1, 2 or B, continuation to the upside, and then a wave 3 or a wave C. Of course, in the bearish scenario, we're then looking for a wave C. In the bullish scenario, continuation. So as you can see on the daily time frame, basically both of these scenarios can work in both the bearish and the bullish scenario, right? Now, in this particular scenario, we are then looking for a flat in B or 2, 3-wave structure over here. Potentially A or 1 can be here with then a running flat in wave A. Then you have a 3-wave structure in B and then a move down in wave C, where the common target for B or 2 over here then is between the 0.5 and the 786, which is between 23.7k and 19k for then support, looking for a move back towards the upside. So in general, probabilities are higher. You're going to see higher prices of at least 39, 40k or higher before you have the potential to move down below these lows over here. And this then brings us to the probabilities of the different scenarios. Now on the cycle over here, the probabilities at the moment are better for the bullish scenario, meaning continuation, as long as price is not showing local weakness. And that is something that I write over here. The high time frame, meaning the daily time frame, as well as the lower time frames that I always show you guys in the daily updates, those will eventually give us more guidance on the probabilities, because in the end, the lower time frame Elliott Wave counts will eventually give you the higher time frame Elliott Wave count. So the lower time frame, the daily updates, those are the ones to follow, because that is where we get the probabilities, the best probabilities for up or down. Also here on the macro time frame, the probabilities are for another move towards the upside, because both in the bearish and the bullish scenario, we are looking for price to move to the upside. In the bullish scenario for continuation, and in the bearish scenario, we are looking for at least 39, 40k to be hit, or all the way up for 50k. And if we then look at the probabilities then on the high time frame daily count, then as it stands, also with a little bit of knowledge of the daily updates that I do, probabilities are a bit higher for this bullish scenario, where over here the low of 2 or B is in, and we are looking for a move towards the upside. But again, as I also wrote on the cycle count, the lower time frame counts, the daily updates, those are the ones that will give us the exact or better, more accurate probabilities of the scenarios. But at the moment, there is no sign of weakness yet. Even if we dip down, there's still a higher probability to take the 36k high over here. And then we take it from there, right, with the daily updates. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD for day trading. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye-bye.